Unveiling the Great Reset, exploring Bitcoin's rise. Hey everyone, welcome back to our channel. Today, we're diving into the fascinating topics of the Great Reset and the rise of Bitcoin. Buckle up, because we've got a lot to unpack. Let's talk about the Great Reset. So, what exactly is this Great Reset everyone's been buzzing about? Well, it's a concept proposed by the World Economic Forum, WEF, in response to the mounting global debt crisis. They argue that we need to overhaul our economic and social systems following the COVID-19 pandemic. Some experts think this reset has been a long time coming, dating back to the 2008 financial crash, or even the abandonment of the gold standard in 1971. The WEF's agenda for the Great Reset involves three key elements. Firstly, they want to revamp government infrastructure to better handle regulatory and fiscal policies. Secondly, they're pushing for investments that prioritize sustainability and equality. And finally, they're all about embracing cutting-edge technologies like blockchain, IoT, and AI to tackle global challenges. The announcement of the Great Reset caused quite a stir, with some dismissing it as a conspiracy theory. However, as economic concerns escalate, more people are starting to see its potential benefits. The DSGE model and economic predictions. Fast forward to Davos 2022, where IMF leaders warned of an impending recession. This warning aligns with the Federal Reserve Bank of New York's DSGE model, a super accurate tool for economic predictions. Unlike other models, DSGE crunches a ton of data from GDP to inflation rates to predict economic trends. The latest update in June 2022 predicts a high probability of a hard landing and even pinpoints a potential recession date. This shift in the model's outlook has sent shockwaves through governments and financial circles worldwide. Experts like Mike Maloney have long called for market corrections to avoid such crises, but it seems like we're heading towards a major financial restructuring, the evolution of money. Let's understand the difference between money and currency. In ancient times, people relied on bartering for goods, but this led to unfair exchanges. So, the concept of money emerged as a more equitable medium of exchange. Initially, items like seashells, fur, and salt were used, eventually transitioning to precious metals like gold due to their durability, portability, and limited supply. Jumping ahead in history, we find traveling businessmen carrying hefty amounts of gold for trade. London offered a solution by storing their gold and providing paper receipts in return. These receipts became a convenient way to trade without the hassle of carrying physical gold. This practice laid the groundwork for how most countries valued their currencies, with banks holding gold reserves and issuing paper currency. However, over time, more paper money was issued than there was gold to back it up. In 1971, President Nixon removed the US dollar from the gold standard, severing the link between currencies and tangible assets. This shift meant that the value of money was now based solely on government trust, marking a significant turning point in economics. Impact of the COVID-19 pandemic. Post-1971, governments gained the ability to print money without the restraint of underlying assets, leading to increased inflation and reduced purchasing power for consumers. Events like the dot-com bubble in 2000 and the subprime mortgage crash in 2008 prompted central banks to print more money to stimulate economies artificially. The COVID-19 pandemic accelerated this trend, resulting in an unprecedented surge in global money supply. Economists who anticipated a market correction akin to the Great Depression were now facing uncharted territory. The excess currency flooding the market has led to soaring inflation rates, making it challenging for central banks to control. As a response, institutions like the World Bank, World Economic Forum, WEF, and International Monetary Fund, IMF, are collaborating on new strategies to navigate these economic challenges and reshape the financial landscape. The rise of CBDCs and the Great Reset. Let's unravel the mystery surrounding the Great Reset and its ties to central bank digital currencies, CBDCs, now. While details about the Great Reset remain elusive, leaders from the World Economic Forum, WEF, and International Monetary Fund, IMF, have hinted at the integration of CBDCs. CBDCs leverage blockchain technology to create a transparent and immutable monetary network. However, the introduction of CBDCs raises concerns about privacy and centralization. Citizens would need to surrender their daily transactional data to central bank authorities, eliminating the need for traditional commercial banks. This shift towards CBDs could also impact private transactions, leading to full transparency of financial activities. In a Real Vision interview, macroeconomist Raoul Pal discussed how CBDCs could influence behavioral economics and incentive systems. For instance, central banks could impose expiration dates on money to encourage spending over saving, directly controlling interest rates based on consumer profiles. Moreover, some speculate that CBDCs could pave the way for a universal basic income, UBI, linking government support programs to the use of digital currencies. The emergence of the Bitcoin reset. Amidst concerns about centralized control with CBDCs, a new narrative has emerged: the Bitcoin reset. Bitcoin, BTC, is often hailed as digital gold due to its deflationary nature, borderless transactions, and decentralized protocol. With a maximum supply of 21 million coins, Bitcoin operates independently of central authorities, relying on mathematical verification by computers. The idea of a Bitcoin reset gained traction, especially after the release of a crypto documentary titled The Great Reset and the Rise of Bitcoin. This documentary explores Bitcoin's potential role as a global reserve currency, highlighting its resistance to inflationary pressures seen in traditional fiat currencies. The documentary also delves into the economic implications of excessive money printing during the pandemic, advocating for Bitcoin as a hedge against currency devaluation. Concerns about Bitcoin reset. Bitcoin has gained popularity as an alternative to central bank digital currencies, CBDCs, due to its cryptographic anonymity, decentralization, and solid monetary principles. However, there are valid concerns about Bitcoin's ability to serve as a reliable global reserve currency. One major worry is its price volatility, which has led some to question its suitability as a stable store of wealth. The recent bear market saw Bitcoin dropping below its all-time high, causing unease among investors and analysts alike. Additionally, the highly regarded Bitcoin stock-to-flow prediction model has faced criticism for not accurately predicting Bitcoin's price movements. This model estimates future prices based on the available supply of an asset and its production rate, but doesn't account for broader economic factors. Given the current global landscape marked by geopolitical tensions, supply chain disruptions, and inflationary pressures post-pandemic, it's understandable why markets might be feeling the strain. Another concern is Bitcoin's network speed, often criticized for being too slow for widespread adoption. However, solutions like the Lightning Network offer lightning-fast and low-cost transaction settlements on the Bitcoin blockchain, challenging traditional financial norms. Lastly, regulatory compliance remains a significant hurdle for Bitcoin's global acceptance. Achieving consensus on regulatory standards across jurisdictions is essential for Bitcoin's mainstream adoption and integration into existing financial systems. Thank you so much for watching today's video on the Great Reset and the Rise of Bitcoin. If you found this information valuable, please give it a thumbs up and share it with your friends who might also be interested. Don't forget to subscribe to our channel and hit the notification bell so you never miss out on our latest content. We love hearing from our viewers, so feel free to leave a comment below with your thoughts, questions, or any topics you'd like us to cover in future videos. Your feedback helps us create content that's tailored to your interests and needs. Until next time, keep learning, stay curious, and make informed decisions. Thanks again for being part of our community, and we'll see you in the next video.